Well, thanks everyone for joining our session. Peak season shopping is right around the corner. So for us, we are going to take this session to focus in on some of the common business strategies and questions to consider as your team and your brand prepare for the shopping season that is ahead. I can kick off the introductions. I'm Shelby Toto, a sales engineer at Sovos Compliance, and I get a unique experience of talking to businesses about their growth expectations and some of the trends that they're experiencing. And we think about how tax kind of comes back into the mix. I'll pass it over to Tim to introduce himself next.
Hey, Shelby. My name is Tim Roden, also with Sovos. I've been in the SaaS software business for about 20 years, working with organizations, processing financial transactions through SaaS systems. And for the last 7, I've been with Sovos, really focused on tax determination and compliance. So excited to talk to you all today about what you should be considering as you get into what hopes to be a very, very busy season. And Diane?
Sure. Hi, everyone. I'm Diane Yetter, and I am the founder of the Sales Tax Institute. We partner with Sovos, and we are a sales tax consulting and education business. So we work with a lot of brands that are in your category and in others in different sizes and different platforms that they sell on to make sure that they are set up correctly for sales tax. All right. So I think I'm going to kick it off. And so what we're going to talk a little bit about is how does your growth strategy impact sales tax? So why don't we go ahead and go to the next slide there. And things that you need to think about is in 2018, we had a US Supreme Court decision come down that changed the implications for when is a business required to collect sales tax. However, that isn't the first thing that we need to think about. The first thing we really need to think about is where are we physically? And so when we're thinking about moving into holiday season, what we see are different sorts of things happen that you may be doing that could create a sales tax registration and collection requirement separate and apart from looking at any economic nexus. And things that we see creating problems are things like having a pop-up store. So physical nexus is creating that collection responsibility at sale 1. And so if you set up a pop-up store, and so this would be if you're going to different states than where you are normally located, selling at things like holiday fairs, and those are, very typical around the holiday season. But the other thing that we're really seeing is impacting Nexus is kind of an outpouring of the pandemic. And a lot of businesses ended up having employees moving to different locations, either on a temporary basis or a long-term basis. And many of the states created exceptions for employees living in alternative work locations during the pandemic. However, we are seeing those being eliminated and being ended by many of the states. We had some end at June 30th. We've got a couple that extended into this fall or the end of this year. And so if you did allow your employees, or maybe you as a brand owner, maybe decided to take the opportunity to pick up and move somewhere else, just keep in mind that that physical location is going to be the number one place that you need to worry about collecting tax on those direct sales. The other thing then is economic nexus. So this is where do you need to be aware of your sales by state as they trip these economic nexus thresholds. We've got a link there to our website's Nexus Guide that you can look at and go and determine whether or not you're there. Common definition for when does a business need to start collecting tax is $100,000 of sales or 200 transactions. So that would be 200 invoices. And what we see in your category, certainly there are some smaller dollars that could trip that over at a very low level. So that is something to be aware of there. And then when do you need to register is the other thing that you really need to keep track of. In many of the states, that trigger is going to be at the next sale after you meet that threshold, and that the measurement is typically a calendar year. So as we move into the busy holiday season, you need to watch for how close are you to those thresholds, and then being aware of that. Now, some of them have a longer time period that you wouldn't need to register right away. And then also keep in mind that typically the states that use the threshold, it's a current or prior year. And so there is a resetting back down to zero at the next measurement period. So if you don't hit those thresholds by December 31 in most of the states, you start over at zero the next year. And then the other thing to really keep in mind is, are you making direct sales or are you selling through marketplaces? And Tim is going to talk in just a moment about some of those different channels that you might be selling on. But keep in mind that whether it is a marketplace or you're doing something like a holiday fair, those might be considered marketplaces, which would put the collection and remittance responsibility on the provider. So whether you're selling through a marketplace like Amazon or something similar, or you are at a fair, you may not be the one responsible for the collection of the tax. The provider is. However, if they are not doing it, then you could be held liable. The other thing, if you are selling through these marketplaces and fairs, some of the states do say that you count those sales even though you're not responsible for the collection and remittance. You count them in your thresholds, while others say that you exclude those. So those are some of the things that you need to think about just in terms of making that determination of where do you need to collect tax. So Tim, why don't you take it from here and fill everybody in on how different channels and solutions can help with that.
Sure. Thanks, Diane. It's crazy how complex it is for sellers to determine if they have obligation, and once they determine if they have obligation, Shelby's going to talk a little bit later about making sure you get the tax rate. So it's really challenging, and it gets compounded by looking at the number of different systems you're using to leverage to run your business. And when we talk with organizations, this is kind of core to our discussion with them about, okay, you didn't get into business to be tax compliant. You got into business because you've got a great product or a great service that you want to bring to the market. But in order for you to bring that to the market to reach your customer base, you've got to leverage different transactional systems. And as Diane was talking about, you may be obligated to now collect and then ultimately remit tax based on your presence, your status in those specific jurisdictions. So as you grow, tax can be an inhibitor to growth. And so, what we talk to our clients about all the time is making sure that you're proactive about that. So, thinking about how you reach your customers, the different systems that you leverage, and especially here in 2021, having gone through the past year and a half, everybody's selling over the internet. It's the easiest way to reach their customer base, to grow their customer base. And so that is a channel that you need to make sure you're able to collect tax. All right. So if you determine that you're obligated to collect tax in specific jurisdictions, you need to make sure that your e-commerce channel is collecting tax. And for those of you, and a large number of you may be selling via Shopify, and some systems like Shopify have built-in tax engines. So as you evaluate some of these systems and ways to reach your customer base, it's really important to understand how tax is going to be determined. So is there some sort of internal mechanism within that system to calculate tax, or do you need to leverage external content or an external engine, right? There's solutions out there that are external tax engines that integrate with e-commerce platforms to make sure that as those transactions are processing, we're able to look at the location of the transaction, the item, what it is, and Shelby's going to go into all this detail, and determine in real time what the tax is. But as Diane was mentioning, especially as you get into maybe some of the busier times, or maybe just throughout the course of the year, just different ways to reach your client base, you may have other channels that you're using to conduct business. So in addition to your e-commerce channel, you may be selling via a marketplace like Amazon or Walmart or eBay, right? And so how is the tax being determined there? Is it your obligation? And if so, how do you make sure that the tax is being determined? But then point of sale, and this sometimes presents a particular challenge, right? Point of sale systems, can they maintain tax rates on that point of sale? And what happens if you've got an item that somebody is purchasing in a store and being shipped elsewhere? Or in the case of the pop-up stores or the holiday fairs, are you taking a point of sale device that sometimes lives inside a physical store and bringing it elsewhere? Well, you're crossing jurisdictions with that point of sale device, and do you need to update the rates? So it's really important that no matter how you're communicating and conducting business with your clients, you're able to provide to them a consistent tax experience, right? Because if you're not, you could potentially impact that client relationship. Right. So if you are overcharging tax on a specific transaction, you may damage that client relationship. If you're under collecting tax on a transaction, you're opening yourself up for potential compliance issues with the jurisdictions you operate in. So it's really important to make sure that you understand the different channels in which you're going to market and conducting business, and that you're providing a consistent experience from a tax perspective. And then finally, if you do choose to leverage a third-party tax engine, right, that's kind of a bolt-on to whether it's your accounting system in the back end or your customer-facing e-commerce system or your point-of-sale system, right, oftentimes these are separate systems that require some sort of communication. So as your customer is trying to purchase something from you, there's a call behind the scenes to a tax engine to evaluate that transaction and figure out the tax. The last thing that you want, and last thing that frankly we want, is for any sort of issues with that tax engine to prevent you from making a sale, right? There's been cases in the past where organizations running e-commerce systems haven't been able to communicate with their third-party tax engines, and it's either caused a spinning wheel on a website. So someone's trying to buy something from you, calling out to get tax isn't coming back, can't complete the sale, right? There's no reason for for the tax system to ever prevent you from completing the sale. That's the absolute last thing that you want. So you need to make sure that if you're evaluating or if you have an existing tax provider, you understand their network latency and how you can potentially prevent against that. The other key here we see, especially is if you're anticipating volume spikes, whether it's due to a flash sale or a sale for a specific holiday period, is if you're leveraging a third-party tax engine, oftentimes you're going to have certain license pricing based on transaction counts. And again, you don't want to be in a situation where you're having to pay more for your tax solution because of increased business that you're doing. A flash sale all of a sudden bumps you into the next threshold. Now you get an overage bill from a tax provider. So understand, if you've got a relationship with a third-party tax engine, understand what your transaction metrics are prior to those busy times. And the other thing that sometimes we see is oftentimes third-party tax engines, again, will charge based on number of transactions that they're evaluating for tax. And so as you're looking at how your shopping carts are designed, sometimes the best practice is really to have the consumer finalize all aspects of the order, get to the end, put all their information in, and provide tax one time at the end, right? And that's just one call out after everything's been added. But sometimes some of these systems are designed so every time you add or remove something from a cart, it's pinging out to the tax engine. And so you may have 5, 6, 7, 8 calls on a single order from a client because they're putting things in, taking things out of the cart. And your tax provider may be charging you for each one of those calls, even though ultimately it's only one sale. So again, not kind of the fun side of this industry, but from a tax perspective, you need to make sure that you understand the systems you have in place to help determine tax on your transactional systems, and make sure that they're going to be responsive, and you're going to be within your metrics for transactions. So I will pass it over to Shelby to talk about some of the more fun things, I think, associated with tax.
Yeah, certainly, which would be, how do we ensure that the customers are being charged correctly every time? So getting into this next and sort of wrap up section, the customer's experience with tax is certainly something that you want to consider at all facets of your business, right? So what you're selling, the different channels, as Tim was alluding to, where you're located, so you can even reach new customers, as Diane was talking about earlier, that all comes back into play as you think more about the customer experience itself. So starting out, let's focus on the left-hand side here, which is we're going to be focused on the initial sale to the customer. So what we're selling, for the most part, within beauty and wellness industries, we see a lot of these products being considered taxable or tangible personal property. So a lot of the times they're fairly taxable across the board. But when we start to see some complexity, it might be where maybe you're starting to add additional things into the mix, like CBD infusing with your serums. When we're talking about the wellness side of the house, when we're talking about actually like dietary supplements versus, like actual granola bars, those all might have different tax implications with how this should be charged. Is this something that should be considered taxable straight off the bat? Is this something that maybe has a reduced rate or a special handling within the taxation? Or maybe across the board, that item might now be considered exempt because this particular jurisdiction, has some motivation around those particular types of items. So what we certainly would recommend would be to, kind of sit down together and assess what you are selling and identify, do these nuances affect us, and how do we account for them in our systems, maybe based on the product categories or how you kind of classify some of these informations within your system for the actual selling of the products themselves. Getting into some other customer experiences here, payment motivators is another great one to consider when you're actually thinking about the customer experience in general. Gift cards is a great way in order for people to return later and expand their collection within your brand. The time of the sale of the original gift card, for the most part, should be considered tax exempt. There should not be a tax passed on to that gift card, though later on when that gift card is used, it should be considered more like cash, and taxes should be applied at that point for the final purchase. So things like that, if you have a normal tax rate across all of the products you're selling and you get to gift cards, you want to make sure that you're not accidentally passing on a tax that shouldn't be passed to your customer at that point. Discounts are another great one. Tim had mentioned flash sales. So we see discounts and different types of sales to motivate the customer. Think about, if there's tiered percentages that might affect the gross total of the sale, or if there's any free shipping that you might be passing on to the customer, as just this might have some payment implications later on. Focused over here on the right-hand side of the screen is maybe some more sale implications, maybe not on the initial sale. So we think more about returns and adjustments. The first thing we might even want to consider for returns is, what would we even want to accept as a return? Sometimes in the beauty industry, we run into things like hygienic concerns for being able to accept products back. So being able to kind of lay out, what are we willing to accept, what time period, when is the original tax date, all the way back to when we'll accept those different types of returns. And for you, thinking about how this all comes back into the mix with tax, is you'll want to keep a better understanding of when those tax adjustments might affect your filing process as well. So maybe you need to make adjustments prior to the filing, or maybe that filing has already been submitted and now you're working back for credits with the states. Other things within the returns and adjustments, I guess, that we can consider is even sales tax holidays. I know more recently we've had some states that had some that are taking traditionally taxable items and starting to pass on an exemption for a little period of time, maybe a weekend or a week, in order to drum up some more sales within those jurisdictions. The last one here, and I'm sure that this could gain its own conversation within the complexity, but to bring up the concept of origin versus destination sourcing. So thinking about those different channels, is it physically, bought by our point of sale and the customer's taking it with us? Or, maybe are we allowing that customer to buy within the point of sale, but we're going to send that item, later on to their location. Depending on the state, origin sourcing is going to take a look at, where is the item originating? So where is it actually being shipped from? Whereas destination sourcing is more going to be focused in on where is it actually being shipped to. And each of the states have their own expectation of where they want that situs or that obligation to be tied to. So thinking about, if you want to have this send sale as part of your customer experience, being able to account for that additional layer of that ship to address. And then, I guess the reverse to think about this is maybe the customer is buying online, but would like to pick up in your physical store. So maybe they want to try on the item, or maybe even add additional things to their cart, so to say, their physical cart in that location. So thinking about these additional nuances of not the original sale, of point A to point B, but having to think about, are there other locations that might also need to be taken into consideration for the actual tax that would need to be collected here? And Tim, Diane, I'm not sure if you have anything else to add around, protecting this customer experience.
Yeah, I think the only thing I would add a couple of points. One on Tim's comment about if you're selling through a portal or a platform like Shopify, don't forget that there's two parts, really kind of three parts to managing your sales tax. The first is, where do you have to collect tax, and then getting registered so that you are legally able to do that. Because what you don't want to be doing is turning tax on in a platform and not having the legal registration to do that, because that actually can get you an orange jumpsuit. So we want to stay away from that type of activity. So if you are selling in something like Shopify, yes, you can go in and turn that tax on, but don't turn it on until you're actually registered to do that. And then with what Shelby's been talking about, making sure that you understand how the states define, because the definition of food versus supplements and what you do with CBD, those differ state by state, particularly when we get into the supplement area. There are some states like Maine is extremely narrow in their definition of what is food. And then there are some other states, California actually has a fairly broad, Washington has kind of there's certain categories that they're brought in. And then the CBD is adding a whole lot of other complexities, because things that normally would be considered food, for example, in my home state of Illinois, CBD and recreational marijuana is now legal. And anything that has any sort of CBD marijuana infusion, brownies or other things that would normally be food, are no longer food. And in Illinois, we have a low rate on food versus our fairly high sales tax rate. So you can't just make the decision once. You actually have to look at all of the different state rules to see how those play out in the states where you're required to collect.
Incredibly helpful. Thank you, Diane. Yeah, that's
Sure.
a great one.
So
well,
maybe.
Nope,
go ahead, Julie. I was just going to say,
Okay.
are there any questions coming in?
That's what I was going to say. Are there any questions? I've been trying to look through the chat box while listening and multitask. And one of the questions from it looks like Sean or Shawnee is, how do we get in touch with you?
So I think, do we have our contacts on, we've got our emails there on our last slide, but I think the key takeaways are, really to understand where you're selling, that physical nexus versus economic nexus. And then depending upon the channel that you're selling through, who is responsible for collecting and remitting? Is it the channel that you're selling through, or are you the one actually responsible? And then a lot of what Shelby was talking about, make sure you understand what you're selling and how a state classifies it. And then with what Tim talked about, you want to make sure that you've got appropriate technology in place to not only collect the tax, but then what we haven't really talked about is the actual remittance and sending those tax dollars into the states. And so you do have to have all of those components ready to go. And, busy season, holiday season can put you in new areas where maybe you have not been responsible for collecting the tax. I just saw a question come in on thresholds. So is thresholds the amount you sell per state or your total gross income? It's going to be per state. So it's usually a dollar amount or a transaction amount. And so if it's a state that the threshold is $100,000 or 200 transactions, a transaction, think of it as an invoice. And then your $100,000 or the count is into each individual state. And if you are in a state with no sales tax like Oregon, you do potentially have obligations to collect other states' tax if you have that physical nexus or economic nexus in the other states. I don't know that I see any other questions. Tim or Shelby, anything else to add?
No, I don't think so. I appreciate, Diane, you and your wisdom here, and Shelby, you and your discussion around the taxability. So appreciate everybody's attention on this topic. As mentioned, this is our contact information. The first step is really understanding your obligation, right? And then from there, you can start to investigate solutions to make sure that you're compliant. Because Diane mentioned, we don't want to see anybody in orange jumpsuits.
Right. And feel free to reach out to any of us if you have any questions.